Right. So do I have access to something that would be from an exclusive nature in regards to, I mean, are there properties out there that I can deem as exclusive that would probably sort of border on the actual good cash flow return and possibly a favourable capital growth as well? Because I probably want to optimise the actual investment as much as I can. I don't really want to play one off against the other. I want to try and benefit from as many different aspects of the investment as I can. How do I actually do something like that?
Well, you can. It's the first thing you need to know, that you can actually have your cake and eat it too. You can have a performance right across capital growth areas, yield areas, all that sort of stuff. Working with me, one of the ways I can help clients do that, and you mentioned exclusivity, that I have some developers that I work with personally who often have me have a look at properties for them and introduce them to my clients before they've ever seen on the market. So that if anything, you might see it on the, say, a realestate.com website or something, and there'll be say a boutique unit development, townhouse development of 10 or 12 units, and they might say, you know, there's 6 left. The reason there's 6 left is because my clients have bought the best 6 at a lower price.
Right.
Before it gets to the market.
Right. So I think, I mean, that sounds good, but like what I really worry about myself in regards to things of that nature is that the actual surrounding concerns that I've got is the actual place itself where that property may be positioned. I mean, are we looking at a desert town, or is there an actual existing population there to start with? Or, I mean, what are the variables that are actually my concern, or is that something that you look into already?
Well, that's something that I look into. So we invest with our clients right around Australia. So we look at what area to invest at the moment, because everybody knows, it might not be in the front of their mind, that property goes crazy in terms of it goes up in value quite quickly, but then plateaus out. So we actually have a step effect. And if we can find a spot where we can identify that we're getting that next step, where things are going to be, there's lots of action now and probably for the next few years, and if we can actually get the timing right and find those locations, that's the first step, and then go down to the detail that you're talking about there. How far away from somewhere, what's the rental vacancy, how big's the population, and within that population, what's the demographic, how many people rent, how many people, what's the percentage of families versus single homeowners versus this versus that, and use all that information, and I process all that information and deliver that to my clients and say, here's my logic behind looking at this place, and here and here and here and here, around the demographics, around the economic activity in particular. It's a huge one, of course, and this is the logic, and I go through a research paper, I call them property information packs, that are specific to the property and then relate directly to the client's needs.
So there's substantial research being done here. So there's obviously the accountant, there's yourself doing the research behind the property, there's forecasting, there's actual correspondence with the developer themselves. Yep. So there's a cast of thousands involved. As an individual, if I didn't have access to all these types of resources, I could probably see how I could make a mistake and probably pick the wrong property, and it wouldn't really do me any benefit whatsoever.
Yeah, well, there's actually a scary statistic that states that there's about 80% of property investors, so that's general mums and dads, that 80% of property investors will sell their first property investment within 3 years. And often they'll do that and make a loss on it. So I've mentioned that, there's properties go through a sort of a period of growth, and then they flatten out for a little while. So just before that flattening out, there's a little bit of a peak, and you find that most investors will be buying at that peak, which is, as they do in the stock market, that towards the peak, just before the crash, there's more people buying in than at any other stage. It's crowd psychology, and I can talk to you about that some other day, perhaps, Brian, but it's a complex situation, but that's what people do. And if I can help people strip away their emotions and give them some logical structured, considered research that's of real value, then that's where we make our progress.